Let's shift focus from technicals to the fundamentals then. Ambareesh Baliga, Managing Partner, Global Wealth Management for Edelweiss Financial Services, joining in this morning. Ambareesh, I can see a huge smile on your face, and no doubt everybody's been smiling on the back of what we saw yesterday. But the question is, will this continue?
It will continue because clearly I think we are in the next phase of that rally, and in fact I was expecting a 200 to 300 point rally because of the elections. We saw about 100 points before the results came out, and after that yesterday we saw a 100-point rally. So I think this will continue for a while longer. When I say a while longer, it is the next couple of weeks, and we should see levels of about 6450, 6500 quite soon.
Stay with us, Ambareesh. We'll just quickly take a break, come right back, and we'll talk some more sectors and specific strategies with Ambareesh Baliga.
First Trades, presented by BSC, Investors Protection Fund.
Good morning, you're watching First Trades. Just under 2 minutes before we start trade here in India. A quick check on what's happening in the global currency and commodities market. First up, as always, I'll tell you what's happening with the yen. Now, there's been some strength in the yen, but Asian stocks overall are trading very mixed. That's because Chinese production data is expected later today, and that is giving some sort of concerns to Asian stocks on the whole. Now, what's happening in the commodities space? First up is crude. Both crude and NYMEX crude have been trading up. That's because, like we've been telling you, stockpiles in the US have been falling, in fact falling for a second week in a row, and that is giving some strength in terms of prices for both Brent and NYMEX. Finally, what's happening in gold? Now, gold has opened up marginally higher but has been trading weak. That's because of fears of the US taper. In fact, we understand that gold has fallen almost 26% this year alone, and at the end of this year it's expected to be the first annual decline in almost 13 years of trade. With that, it's back to you guys.
Thanks, Ananda, for that. We are in conversation with Ambareesh Baliga, Managing Partner for Global Wealth Management at Edelweiss Financial Services. Ambareesh, you're expecting this to sustain for a bit. What should be the few of the sectors that are going to lead the markets upward from here on? Same old, or are there going to be any new leaders?
No, sectors would be other than FMCG, pharma and IT. I think they have performed extremely well over the last 1.5 to 2 years. But now it's the underdogs which will start performing. Capital goods, infrastructure, industrials, metals, I think these are the ones which will start performing now.
The other important part, Ambareesh, out here is the fact that when we talk about the next pockets that one can actually look at, the mid-caps really also haven't participated much. You think probably the next couple of months you could see some activity there?
Absolutely, I think that's one pocket which should start performing, because you didn't have too many domestic investors investing in the market in the past few years, especially the past 2 to 3 years. But now with this new high, I suppose these investors will start coming back, because that losing out feeling would be there, that they had missed out on this rally in the last few months of this 1,200 point rally. So now, since we have touched new highs, I think most of these investors will start coming back, and once they start making some money, they'll start pumping in more, and that's exactly what I see happening over the next at least 5 to 6 months.
Fair. Ambareesh, just hold that thought. I want to just quickly address the pre-open and the currency market as well. The pre-open's a little bit on the muted side is what we're seeing right now. Sensex down roughly around 6 to 7 points is the kind of cut that we've seen there. So a little bit contrary to what the SGX Nifty was pointing towards. Nifty also down roughly around 25, 26 odd points is what we're seeing so far. Though there's been a little bit of strength on the currency, 61 is what we're trading at currently. The closing yesterday was roughly around 61.13 odd or so is what we'd actually picked up. So there's marginal strength on the currency markets, but let's get some strategy and perspective going for the rupee as well. Partha Bhattacharya, financial market professional and forex market expert, is joining on the phone line right now. Partha, thanks for taking this call. What's your thought on the currency markets right now?
I think the euphoria and exuberance that we have seen yesterday in the stock market, and also a little bit in the currency market opening time, is not necessarily sustainable. See, the fact is, as the Delhi results have shown, nothing is given. And assuming that a reformist government comes into power in May 2014, which is 6 months away from now, as Moody's have also talked about it, that even the impact of any reform measures, even if they initiate on the day one, will take about a year and a half to have a significant, meaningful impact on the economy. So this exuberance is a little overdone, and I think there will be moderation. And very importantly, Fed action is also going to have an important impact on the currency market. Although Fed tapering, QE tapering is given, and the market may not react the way it did in May 2013, even then there will be some impact on the inflow of funds from abroad. And current account deficit come down. So those are positive factors. Reserve has gone up substantially to 291 billion or so. So ability of Reserve Bank of India to control and soothe the market is important and is there. Even then, there are current account deficit which needs to be financed by capital account inflow. To that extent, I would expect rupee to trade today, not beyond 60.70 to 61.30 or so. And as we saw yesterday, that the lower level of dollar rupee, there are demands coming in from not only public sector oil marketing company, but private sector oil marketing companies were also big buyers yesterday. So I expect the rupee, also RBI may not like rupee to appreciate in a big way. So I would expect rupee to trade somewhere between 60.70 to 61.30 today. And going forward for a slightly medium term, I don't expect rupee to appreciate beyond, say, 60-ish level, say 59.70 or so would be holding.
Right, Partha. We leave it at that. So that's some perspective coming in as far as the currency is concerned. Partha Bhattacharya believes that this is just a bit of a euphoria playing in as far as the strength that we've seen yesterday and today in the currency. 61.07 is where we are, but there are larger issues. For example, the Fed QE taper, as well as our own domestic factors that will play out in the short term. We were in conversation with Ambareesh Baliga. Ambareesh, you pointed out few of the sectors that you think will be performing much better. But let's talk about information technology a bit more. It's done quite a bit in the last 6 months, but say from here on for the next 6 months, any specific pockets in IT itself that you still think can perform better, because fundamentally things are still looking up for them?
Yeah, surely. The thing is they'll continue performing, but the question is whether they'll outperform the broader market or not, which I don't think will happen. I don't see IT reacting from here. I'm not bearish on IT or pharma, but then when you're investing in the market, you look for stocks which will perform better, and the sectors which will perform better. From that point of view, I'm saying that over the next 5-6 months, there are other sectors which will outperform IT and pharma.
What makes you so bullish on metals and industrials, and any specific stocks there?
No, in fact, metals again had underperformed for quite a while, and we have now seen the cycle turning around in the last 2 to 3 months. And in that, my best pick is Tata Steel, followed by Hindalco. I think these are the two stocks which will, I think, perform going ahead. We have seen an extremely good performance from Tata Steel, which has moved from nearly 200 to closer to about 420, 430. But here we still have a much higher target. So I think on a correction, one should be looking at getting into metals.
Just moving away from a couple of these outperformers that we've seen when we talk about the metals and the engineering space, what about the cement counters as well, Ambareesh? Seen some activity in trade yesterday when we talk about that pack, Ambuja, ACC in the mid caps that got a little active over the last couple of days. Is that a pack worth looking at right now?
Even cement, I don't see too much of an outperformance, because we have not seen cement really underperforming in the last 3 to 4 years. In fact, they have been comparative outperformers. If you look, if you compare them with the other industrials or the metals pack over the last 2 to 3 years. So the valuation-wise, I think they are more or less fully priced. There is not too much of an upside.
In terms of the power space, Ambareesh, what are you tracking there for stocks like NTPC? Because those also have been somewhat of a mixed trade over the last couple of days. Any thoughts on that segment there?
Yes, I think the power space is the next one, which I think you should see some performance, especially, looking at life beyond the general elections, beyond June, July 2014. So from that point of view, I think one should look at stocks like Tata Power and NTPC.
In fact, NTPC, you can see the pre-open also is trading a little bit on the lower side. Remember, you've got those much awaited release coming in from the CRC regarding the 5-year tariff plan that we've actually picked up. So hence, you got some pressure on NTPC today. Keep an eye on that one because it looks like the tariffs might actually tend to somewhat get a little bit on the lower side. We'll try and get you some more details on that in the next couple of minutes as well. So that's NTPC in the pre-open, which is down roughly around 4 to 5% so far is what we're tracking. But Ambareesh, moving on beyond the index, any stocks that are on your radar right now that you would advise clients to probably look at as value buys?
Among the mid-caps where we see performance, we are suggesting ILFS Transportation, where again we have seen some activity in the past few weeks. Crompton and Greaves, Voltas, auto ancillaries, we are looking at Exide basically from a replacement market angle, where again in a similar sort of market we have seen Fiat in tires actually really performing extremely well based on the replacement market theory as well as rubber prices coming down. Exide had an issue of the lead prices still remaining decently stable. There we see some correction happening and the replacement market actually booming. So I think Exide is a good buy. And oil marketing companies is something which I've been recommending now for a while, for the last 3 to 4 months. Again, there I think one should look at buying HPCL.
All right, Ambareesh, we'll leave it there. Thanks so much for joining in this morning and getting us your perspective in terms of markets as well as a couple of stocks there. All right, just a quick mention on the way the pre-opens are panning out right now. Just pull up the benchmark indices for you and what we've seen in terms of the quotes coming in from the pre-open. Well, markets could see a little bit of a slower start. Nifty down around about 9 to 10 points. Sensex 37 to 38 points lower. That's barely 0.2% of a cut is what we're seeing on the benchmark indices. The rupee though at around about 61.09, pretty stable so far is what we're seeing in terms of the way we're setting up for live trading. All right, time for us to take a quick break then. Up next, Sandeep Bhatia from Kotak Institutional Equities is joining in with his strategies. That's coming up in just 2 minutes.
First Trades, presented by BSC, Investors Protection Fund.